the market still under pressure by the close of yesterday's session, profit taking as expected, coming to bear on the rally that this market has experienced over the last couple of sessions. What's your take on the activity that we're seeing right now?
Good morning, Alishia. What we saw in the market yesterday was generally in line with our expectation. You would recall that the market had experienced about 6 days of sustained positive performance before it closed slightly lower on Friday. And so our expectation for this week was that at the open of the week, maybe for the first 2 days, we expect to see a slight decline in the market, but we expect that towards the end of the week again, bargain hunters would come back into the market as value investors begin to pick up stocks that are attractively priced. And so we expect that overall, perhaps the week will just end on a flat note.
Well, surprise, surprise, we had the oil and gas index bucking its negative trend, which has been experienced over the past week or so, closing 0.5% higher and largely on the back of gains, as I mentioned earlier, on Mobil. Run us through some of the, the reasoning behind the momentum that's being provided for the sector at the moment.
For the oil and gas sector, really, this sector is continuing to look more attractive more and more. You know, government is doing a lot in terms of reforms in that sector. We had seen the passage of the local content bill, the petroleum industry bill we hear may be passed before the end of this month. So overall, that sector is continuing to look attractive. We also saw that the government has put in place some form of structure that allows the companies to begin to get quicker access to their funds, because one of the greatest challenges of the petroleum marketing sector had been the fact that when importers bring in the goods, they tend to have operational challenges to get reimbursements from the government. And so government has put in place a note that would provide some form of coverage in that area. So overall, that sector is looking more and more attractive. The companies are in a position to now grow their turnover better, and so investors are generally getting more interest in the sector.
Well, while that is some of the fundamental, support that the sector is enjoying right now, to what extent do we look at this as mere sector rotation, where we've got the oil and gas sector back in vogue and the banking sector pulling back?
Yes, I think it's what we're seeing there is in terms of the lagged effect. For the banking sector as well, we are beginning to see recoveries already in the banking sector. We've seen all the banks that have released their results so far have released very strong results. In fact, all of them have been very profitable. They've all returned to profitability, and we expect the likes of GT Bank, Access Bank, and Sky Bank, who are yet to release their results, to follow in that same trend. Now, what you would find, therefore, is that overall, as investors see these results, they will begin to move into the banking sector as well to take positions, and we're already seeing some of that. So we think that, indeed, the banking sector will even still continue to be the sector that offers the most value, at least for this year, in the NSE.
Let's get your view on the food and beverages space specifically, because we've had quite a few company earnings reports trickle through from that space. So overall, what's your view on the food and beverages sector at the moment?
For the food and beverage sector, it's also, we've seen results from the likes of Cadbury and Nestle during the period. For Cadbury in particular, it's interesting to see that the company has returned back to profitability after about 2 years of sustained losses. Now, what we're seeing in the case of Cadbury is a situation where the company has been able to put in a stronger board and a stronger management team, and they've also been able to significantly manage their operating costs. And as such, we are seeing a profitability of about 735 million naira for their half-year results. In the case of Nestle as well, which is another very key driver for the food and beverage sector, we've also seen Nestle's results. They continue to meet investors' expectation in terms of sustained turnover growth as well as profitability growth. For their profitability, we expect Nestle to close the year at about 14 billion, And seeing that Nestle has a payout ratio of about 85%, we do expect that investors will continue to take position in stocks like that, and the sector as a whole continues to look very attractive.
Also within that space, we had PZ Cousins out with full year numbers. The company seeing a slower rate of decline in sales growth, with an improvement in factors influencing the real sector of the economy, and one of that has been the loosening of credit most especially. What's your outlook for the company moving forward, especially bearing in mind that this company has been making investments in manufacturing operations and supply chain facilities as a whole?
Yes, Alishia, what PZ have been able to do in the last 1 year is to invest more in their plant, is to enhance their production machinery, and because so much is still in the pipeline, we are not seeing it yet in their top line or bottom line. For their full year results, we did expect a flat growth in turnover, and so we're not surprised seeing that the turnover was more or less flat. However, for their profitability, we did see an increase of about 5% in their PAT, whereas we expected a decline of about 5%. So overall, for PZ, we think they have been able to enhance their operational process. They are more efficient with their operations, and we think that the company would continue to do well in the medium to long term. Right now, we think it's trading at its fair value, and so we just recommend a hold for PZ.
For the trading day ahead, Jide, anything specific that you've got your eye on today?
For today, really, we expect to begin to see, we expect the result for GT Bank perhaps might come in today or maybe before the end of the week, and we do expect that kind of results to drive performance some more in the banking sector.